Hi there, welcome to Neppy Invests. Today I'm going to talk about why I bought Bluescope Steel about 2 months ago. So we'll get into discussion, the thought processes that went through my head, the strategies that I used, and I'll just tell you that I have two portfolios. So two portfolios. One of the portfolios is for companies that I'm going to try to hold as long as possible. And those are sort of the high growth companies. And I'm hoping some of those companies become 10, 20, 100 baggers. And I'm not going to touch those companies unless the story changes. My second portfolio, and that's where I put Bluescope Steel into, is a company that has just seen a shift in sentiment or has just begun a new uptrend. And these companies I hold as long as the uptrend continues. And for Bluescope Steel, that could be 1 month, 1 year, 5 years. It doesn't matter. I'm just going to wait until the sentiment shifts and the trend changes. So what does Bluescope Steel do? You can probably guess just by the word steel. And I sort of do like their philosophy here. We create, inspire smart solutions in steel to strengthen our communities for the future. I really like how they use the word strengthen as sort of a play on the word steel and saying or suggesting that steel strengthens communities, which it sort of does in a way, sort of indirect way. On the right hand side there, they can look at, you can read that yourself. And on the bottom left hand, something I did find to do with the financial philosophies, something I do like there, number 3, disciplined capital allocation. I do believe that capital allocation is perhaps one of the most important things managements have to decide how to do or what to do. So capital allocation is simply what management have to decide how to handle their free cash flow or their profits. And they have really 4 main decisions there. So they can do acquisitions, research development, so going for growth there, or they can give the excess profits in free cash flow to the shareholders in terms of dividends or share buybacks. So I like it how they've talked about capital allocations, how they've talked about how they're going to be disciplined and only give back 50% of their free cash flow to shareholders in the form of dividends and on-market buybacks. So I'm liking how they're talking about that. But that was a very small part of why I bought Bluescope Steel. Wasn't nowhere near the major part. So finances was the small part, and I'm just going to talk briefly about the financials here. And the main thing to look at here is, one of the things I do look at is I compare equity, which is the net assets, to the market cap. And a company like Bluescope Steel, whenever I see the equity are greater than the market cap, that's sort of an indication to me that it is on the cheaper side. And especially if historical, when you look at the history of a company. So if you don't understand the concept here, probably the easiest way to talk about it is if you can buy a company for $1 billion, say the market cap, and they have net assets or equity of $1.2 billion, technically you can just turn around instantly and sell those assets for $1.2 billion and just net the $200 million as profit. It's not as simple as that, but that's the general idea where I'm coming from here. Otherwise, revenue has just been slowly going up. So this is not a growth company. Equity is slowly going up, but we've seen little troughs in market cap. So it got as low as $1 billion in 2012 and just below $2 billion in 2015. So sentiment had really become negative around Bluescope Steel around that time. And the main reason it became negative was when you look at the revenue, even though revenue was starting to come down a bit, the operating cash flow got down as low as $21 million in 2010. But between 2012 and 13, that's when we started to see the financials started to improve with Bluescope Steel. And maybe that's when the value investors would have bought in. We'll call them blind value investors who don't look at charts. I would have waited. I've seen the financials improving. I might have waited until I saw a shift in sentiment. And you can see a shift in sentiment just looking at the charts. And we definitely saw that with Bluescope Steel. But you can see at the chart on the right, the share price got as high as $50 in 2008. And then it went down all the way down to about $2 in 2012. So all you can say is it was a value destroying company during that period. And whenever you see the share price go down so quickly like that, there's going to be a lot of holders who will want to sell out when the share price starts going up. And that's definitely what we saw between 2012 and 15. Share price started to go up, and there was a fair bit of selling. And not until we got to 2016, where I think a lot of those shareholders from 2007 and 8 were expunged from the shareholder list. And that's when finally the share price started going up on improving finances, improving sentiment, and a new uptrend developed. There was a breakout buy in early February, and that's where I've got marked here. That's when the share price zipped up on increased volume. So there was a definite spike in volume around that time. We saw the share price get above the moving averages. The moving averages started to shift upwards, and we just saw the share price stay above the moving averages for the next 2 and a bit years. So that early February breakout buy was significant. So this is just looking at the weekly chart. If I zoom in on this and look at the daily chart, we can actually see around the July, August 2015, we started to see the trend change, just looking at this daily chart. But there was a lot of, not a lot of volatility, there was we'll say it's range trading between about $4.60, 70 and around about $3.50 to 75 between August and January. But there was signs the sentiment was shifting, the trend was trying to shift, but we needed confirmation, and we had confirmation on this breakout buy on the 12th of February 2016. So it went above the resistance line, or resistance just below $5, and we had that on increasing volume too. So it gapped up to that level, and there was an announcement on that day which caused this breakout buy, and that was the start of the uptrend, this breakout. So a lot of investors, especially amateur investors, would see that increase in share price on that day and not buy in because they just think, because of recency bias, they just think, oh, it's more expensive than it was, or the price is higher than it was the last few months. Why would I buy when it's more expensive or the share price is higher? But this is a reason why psychology is so important. You've got to expunge that sort of feelings aside, because there was a reason behind this breakout, and I'll show you that right now. So this is a very powerful sort of announcement that you will see this happen time and time again. When a company gives out a profit upgrade, you'll see a breakout, especially if they do it before trading opens. There's going to be sort of a gap up, and that's going to lead to a bullish uptrend or a new uptrend. And they gave a good EBIT upgrade here, so it was a profit upgrade. So it increased profits from expectations from $180 million to $230 million. So a fairly big increase in profits or EBIT expectations at that time. Now let's get back to what's happening right now. So a similar sort of story, sort of maybe starting to play out in August. The share price was starting to try to change in sentiment. And we had a little bit of a breakout, not a big breakout, but the share price went just above a resistance line on the 11th of August. And even I was a little bit nervous when I did buy this, just because if you go back to around June, we did see the share price get to $13 and pull back. So there's going to be some resistance around that $12.50 to $13, just because some of those holders at that point who bought in then would want to sell out. It's another very powerful psychological barrier to get through. A share price has to. But I just like that the moving averages were coming together. That's one thing I really look at. And it started to break out above, or the share price started to break out above that moving average, and the share price went above the previous resistance level, just above $12. See that previous high? So it went above that previous high, which sort of was a higher high. So we had a higher low and a higher high, which is sort of a shift in a potential shift in trend. So I've bought in, that was my strategy. I saw a shift in sentiment, shift to maybe a beginning of a new uptrend. So my strategy going forward was to be patient. So I have no price target I was looking at. I've done this before where I've had a price target and then I sold it too soon when the share price reached my target. I'm looking at you, full of scoop metal. And I decided instead of having a price target, I'll just ride the trend as long as possible. So maintain holding Bluescope as long as they're in an uptrend, and only sell if that uptrend breaks. And it could break for many different reasons. A profit downgrade, which they not going to have soon anyway, and just maybe a shift in sentiment. So this is the final chart, looking at from when I bought all the way up to now. We have a definite uptrend here. So I've got that pink line there with the uptrend maintained right on it. And I've got 4 points where it hits the low, and that's a definite sign of an uptrend. So you want at least 2, but the more times the share price can hit the uptrend, the more powerful the uptrend becomes. So if it's hit it 4 times in this time period, so we've got a definite uptrend that's at right now $13.25. So if it goes below $13.25 right now, I would sell, but the uptrend is going to keep continuing, and the share price I don't think is going to come back. So without a doubt, we've got an uptrend here, and then we saw the share price increase 11% on Friday, the 23rd of October, and it did gap up too. So very similar to February 12, 2016, it gapped up on an announcement, and the market was very excited by that announcement, which I'm going to show you right now. So Bluescope announced that they're expecting EBIT profit of around $340 million for the first half of this financial year, which is an increase of 30% over the previous half year. So they're fairly bullish. And this is, I've got sound familiar question mark. Well, it's actually not familiar. It's not the same as the February 12, 2016 announcement, because that was an upgrade to expectations. This is setting expectations. So if they do another announcement in, say, 3 months' time about this number, that 30% increase is now 40%, that's an upgrade to expectations. So slightly different announcements, but the end result is the same at the moment, and we'll wait to see if the final result is going to be the same, where the uptrend has now started with a breakout and the uptrend just continues for a few years or so. So that's all I've got for this video on Bluescope Steel. Hope you've enjoyed it. I only do these videos for entertainment, educational, and research purposes for myself. If you have any comments, leave it in the comment section, especially about my philosophies or investing philosophies. Otherwise, I'm not a professional advisor, so if you do need professional advice, make sure you seek out a professional. So that's all for today. See ya. Have a good day. Bye.